Hey everybody, welcome to the Pedlar team page once again. Thanks for tagging in here. And today I have my brother. If we don't look alike, we get that a lot, that we look a lot alike. So here we go. He is in the financial planning business with Sterling Mutuals in Sarnia. And going into the new year, I thought what an incredible source of information we could all get, as I'm sure we're all wondering, what are the markets going to do? And so we have our financial expert, Aaron Pedlar, with us today. So hope you guys enjoy and get some good tips from this video here today. First off, Aaron, years in the business, what got you interested in helping people be financially sustainable, successful?
Fair enough. Gee, well, first, thanks for coming to Sarnia. A little change of scenery because a lot of times when I go to Grand Bend, everyone runs into me and they think, oh, you're Garrett. And so when you're in Sarnia, maybe it's a little opposite. I'm not near as well known. But yeah, it's a little bit twofold. I've been in the business now for 15 and a half years. That's hard to believe. Really, time does fly. But it is a little bit twofold. Growing up in a real estate environment, had a great mentor in Doug, our dad, and the real estate business though is cyclical, especially in Grand Bend. I always recall him being super busy in the spring as the spring market was heating up, and then basically nonstop through Thanksgiving. So the financial advisory business I find is very similar in the sense you're dealing with people. They need your they're hardworking people. They need your expert opinion, and they rely on you for timely advice. Yeah, I've been doing it for 15 and a half years and absolutely love it. The second part where I quickly realized I had this passion for in the business was the lack of financial literacy in Canadians. And it's no fault of their own. They should really be teaching this in school, but I quickly found most Canadians really can't tell you the difference between a RSP and a tax-free savings account. Things that I would think would be more novice when you're in the business, let alone how bond or yield curves influence bond markets, or how what really drives stock prices. So educating clients and helping them become more informed is certainly the hallmark of our practice, and certainly love it.
I sense a lot of passion in your voice where the answers are coming from. What makes you different from the next financial advisor, and why should they call you today?
Yeah, I mean, Canadians do have a lot of choice. They have more choice today than ever before, whether it's online platforms, whether it's turning to their local banks. There's a lot of different advisory companies. If you turn on your television, they have a lot of sources coming at them. Advice is important, but I think the biggest thing that makes us different is, a lot of people do turn to their local banks for advice, but, they do just offer their proprietary product. So if you go into ABC Bank, one of our big banks here, and you sit down with one of their advisors, they are going to listen to your needs, but then they're going to turn around and offer you a product with that bank's name in it. So is that right, wrong? Is that the best thing for you? I'm going to venture and say probably not. So I paired myself, like I said, I've been in the business for 15 and a half years, but I've been with Sterling since 2012, so just going on 13 years. And the nice thing is with Sterling, we're independent. So the advantage to our clients is we don't have any proprietary product. We deal with all the banks, pretty much all the mutual fund companies, all the ETF companies, GIC companies, insurance companies in Canada, and we don't have any of our own product. So I think that's a huge advantage to our clients, because most other advisory firms, whether it's the banks or some of the bigger names you hear of, they do have their own shelf and certainly limit investors and their ability to choose. So once people have the scope of our flexibility, I think that poses a real advantage to our clients.
Yeah, and I think breaking that down is the simple concept of you're not tied to any corporate system, any corporate shareholders or whatever, you literally are picking the program of a plethora of platforms of what's best for that client and suiting their needs.
Yeah, absolutely, and that's huge. Like, not having sales targets or quotas, or you need to do this much, or you need to sell this much to get this from us. Like, there's no carrot or incentives to offer one brand over the other, so you can truly sit down in a biased, conflict-free environment to listen to what the client's trying to achieve and help navigate them in what product is best for them out in the market, because there's a lot of product.
Awesome. Exchange traded funds. What are those? And you do offer them, so I wanted you to speak on those. I think a lot of our novice investors would not know what these are.
Yeah. It's certainly, you have all these acronyms and titles, and it certainly convolutes. I can see how people can quickly be very confused when it comes to investing. So I think investors are probably more familiar with the term ETF. It's become more prevalent here in the last 4 to 5 years. So ETFs are exchange traded funds. So I got my license maybe 2-3 years ago once Sterling offered it on our platform. Exchange traded funds are a nice way for investors to get into the market in a super low cost alternative or low cost option to get in the market, whether you want to track the S&P 500, the NASDAQ, the Canadian markets. Now, they are not all ETFs are created equally. You have some that are passively managed that are going to follow an index. You have some that are more rules-based, quant strategies. It gets very complex, but it is nice. Now, I also have, which I think is a bigger advantage to our clients, my alternative, liquid alternative license. Not nearly as talked about, but I think that provides a better opportunity for investors to, utilize, derivatives, hedging strategies, put call options. And it's a way, we don't expect our clients to understand the intricacies of these solutions, but it is a nice tool in our toolbox to help mitigate the downside and provide a nice, smooth investing experience.
Interesting. I haven't even heard that term before, so
Yeah.
that's good to hear those. Over the holidays, we've seen a lot of ads, and they're always advertising to get the younger population who haven't started their investment portfolio yet, is these online platforms, and they sell the management fees side of the story. What is it? What are some risks of that, and why should they be calling you instead of adventuring that path?
Right. Well, that's a good question, especially with the World Junior Tournament going on. I was laughing on the couch with my wife. I felt like every other commercial was one of these online platforms. And,
Totally.
And you know what? If you're not, if you know what you're doing, I mean, it's not the devil, but I do think that these 30-second ads do withhold a lot of information. Making it sound like hearing and getting and receiving advice is the reason why you're not succeeding or you're not achieving your investment goals. Studies have shown time and time again that people that have advice or work with an advisor have 3 times the net worth and 4 times the investable assets as those that try to go it alone. I think there's a lot of reasons for that. If you look at your higher net worth individuals, they're not doing it on these robo platforms. They are working with advisors because, bottom line, advice, it takes in a lot more than just picking the right investment solutions. Advice, takes in consideration your time horizon, your goals. Advice takes in consideration tax, which is a huge implication. Advice covers a whole host of topics, whether it's estate planning, whether it's incorporating insurance. Advice matters, and these online platforms. I mean, you look at their products that they're pushing. All they are is low-cost ETF solutions, and I mean their performance is it's okay. It's nothing to write home about, but it does definitely. There's financial success. There's a lot more to it than what they portray in a 30-second commercial, and they really are targeting those younger generations that are just starting their investment journey. And if it's the difference of not starting at all or doing that, you're probably better off doing that, getting money invested and, but yeah, that's all I got to say about those. They don't really pose much of a threat just because, when you are receiving actual tangible advice, the cost is pretty minimal.
Mm-hmm. No, totally. And I think that ties in great to our next question is, what would you tell any given 20-year-old in terms of financial advice, or what would you wish you told yourself or knew when you were 20 years old? Because I think there is a huge lack, you already mentioned, of insight of financial advice in our education system. It's pretty much nil. Mm-hmm. So what would you go back and tell your 20-year-old self?
Oh, I mean, I love to, when we have clients, children or young adults come into the office because they're like, hey, you got to meet my daughter or my son, and they're 25, 26 years old, young, just starting their careers. I love showing them the real secret sauce to investing is compounding. And when you get started at the age of 25 opposed to the age of 45, you're theoretically building in 2, if not 3 extra compounding periods. So I love showing just a simple growth calculator on our screens and just showing them they're taken back by how money can compound, and the secret sauce is time. So if you want to retire at say 65 or 60 and you start at 45, only got 15 years, opposed to when you start at 25. Not only do you have 20 extra years, but you're building in about probably 3 compounding periods, because you are going to be positioned probably a little more growth centric between 25 to 45, opposed to the way your portfolio might be positioned between 45 to 65, right? So, quick advice: get invested, stay invested, and contribute regularly in a systematic fashion. Don't try to time the markets. It's very impossible to do.
I think that's the reason for the line of don't time the market, it's time in the market.
Bingo. Yeah. I mean, the longer you stretch out that time horizon, the more, overwhelmingly positive the response is going to be. And I think, if you want to give yourself a little benefit is if you are working with an advisor who is committed and knows what they're talking about in the markets and putting you in the right products, that's just an added benefit.
Okay, wow, it's a lot of information, a lot of good info. As you see behind us, we got the Sarnia Bridge in the background here. It's timing suited. It is got some snow in it, and it is the middle of winter. But Aaron, you can service folks across Ontario, or are you licensed in other provinces?
Yeah, so I mean, the core of our clients, would be more or less southwestern Ontario from, let's say, just north of Grand Bend through London. That would be the core of our clients. But having my license in Ontario, I can do business with anybody in Ontario. And one thing that maybe sounds weird to say, positive, that came from the COVID pandemic is, things like DocuSign, having virtual meetings are totally normal now, right? So we have clients all across the province. In fact, I have my license in a few other provinces as well. So, we are able to help clients from coast to coast. And, if you asked me 10 years ago, do you have clients in Alberta? I'd be like, I don't really know anybody in Alberta, so why would I have clients there? But through referrals and that, it makes it very easy to get your license there. And so we have had our license in several other provinces. And, we conduct our meetings virtually and give them the same great quality service and communication and insight, and we're able to help them.
Yeah, I guess in an age of technology, that barrier is skipped and is avoidable. And then the other, like real estate, I would never suggest using somebody that's 100 kilometers away from you. But in your business, it's an Ontario market, it's a province-wide market, or it's a national market, it's a North American market. That can be applied to just about anybody.
Well, yeah, you're investing in global markets, right?
Yeah.
So, it's not like, you're based out of Timmins, Ontario, so your investment approach is different than the person in London. No.
Exactly. I think probably maybe the most enticing information we might get out of this, because it's so going to happen tomorrow, and everybody likes to know what's going to happen tomorrow and not 5 years from now. Sure. In the longevity. What are some of your 2025 market predictions?
Yeah, okay. That's a big, bold question, and certainly if you turn on TV or type in the computer system and you wanted to, there's lots of opinions out there and everyone's valid to their opinion. You got the Bulls and the Bears and they're always clashing. And, honestly, I think it's good to have an opinion on what's going to happen, but there's a lot of events that happen every year. So, nobody really ever has the crystal ball. What I tend to do is really just consistently look back at the fundamentals and, beyond popular belief, the market doesn't care that the calendar's changing from December to January into a new year. It doesn't. Sure, there's seasonality, but, you have to look at the background of the fundamentals. So we did do a SWOT analysis earlier this month. It's on our blog. If you visit us at pedlarfinancial.com, you can come read it. And not to be the spoiler, but we believe that the strengths outweigh the weaknesses and the opportunities outweigh the threats. So if we just kind of back up, the last few years have been pretty chaotic in financial markets. A lot of people kind of started to tune in once that pandemic hit. You had the volatility in the markets spiking, and you're stuck at home, so all you're doing is following stock markets and that. So if you just kind of look at what's happened in the last few years, 2023 helped reverse what was an oversold cyclical bear market. And then in 2024, investors were rewarded by, progress in, inflation easing, more accommodative central banks, corporate earnings still remain strong, and still a very strong job market. We're talking mainly in the U.S. So against that backdrop, that provides a pretty nice, yes, we've had a nice bull market run starting, about mid-October of 2022. So we're about 26, 27 months into this bull market. I believe that the bull market still has legs and room to run, but it's very common, that bull markets do take a breather, a pause, a recalibration. To kind of justify the valuations. So I would, it sounds, boring, but I would predict that 2025 is more of a return to more of a normalized return path. Not to say that, I think 2024 exceeded a lot of investors, including my own expectation, of a 20+% rate of return year, but you look at like what's been driving the markets, and there's a lot, it's mainly those big mega cap, those big tech names, anything associated with AI. Think NVIDIA, Microsoft, Alphabet, Amazon, Meta, etc., that have been really driving the market. So I think you're going to see some, hopefully more breadth, more participation from those lesser known companies. Think the other 490 companies in the S&P 500. And, I think it's going to be more of a stock picking environment opposed to just holding a broad index. So, I encourage investors, to take a diversified approach, think growth versus value. So, technology versus financials, and even, extending your, what you're picking on the market cap size, and not just in these giant large cap names, because there is good value in those small mid names. And then furthermore, bonds are back. Interest rates have come off from a very low level. So bonds are back in a very meaningful way. And, so for your more conservative investors, or for those investors that need that ballast in the portfolio when markets do correct, bonds are back, and they do deserve a spot in your portfolio. Bottom line, Garrett, like markets are up since 1950, over 70% of calendar years. If we look at more recently, since the great financial crisis, they're up more than 80% of calendar years. So, what's going to happen in the next week, the next month, the next 3 months, the next 6 months? Who knows? Your guess is as good as mine. All I know is being consistently optimistic about markets, getting invested, and not trying to time it. You're gonna be just fine.
Love that.
Yeah.
Okay. Folks getting in contact with you already said your website. Your office is in Sarnia.
Yeah.
We got your website. He has a great blog. Get on his website, pedlarfinancial.com.
Yes, sir.
pedlarfinancial.com. Get on his website and go sign up for the newsletter, once a month newsletter, and it's not a bunch of farce. It's some really good information handwritten by Aaron himself, and you can tell it when you're reading it, with some nice graphs for those who like to see the images and that kind of stuff. Aaron, this was, I think for me, I didn't even recognize some of the words of financial advice you gave, but that's why I use you and have an expert in my corner doing and making my selections and guiding me to financial success and financial freedom. So he's in Sarnia, he's easy to reach. Give him a call, come into the office, check his website out. Thank you so much, Aaron. Is there anything last minute you wanted to say, or do you think we covered it all?
No, I mean, there's a lot to uncover. I mean, it's humbling, you know, when you sit down and have an opportunity to talk about it. You're like, holy Christmas, there's a lot to financial markets, you know, and kind of getting back to that ad there, or that question about, you know, these online platforms. Like, investing is a lot more. Financial success and achieving your goals is a lot more complex than a 30-second commercial. And so we encourage, you know, like the hallmark of our practice is educating clients and helping them just become more informed, because we find when you do that, they're going to make just better decisions about their future. So, you know, if anybody wants to reach out, they can reach us out at on the web at pedlarfinancial.com, or directly here at the office. The number is 519-491-1860. So thanks so much for the opportunity to join you.
No, this is a lot of fun, and I hope you all, thanks for those for tuning in, and hopefully you get some good tidbits, and let's see what the market brings in 2025.